Good evening, my dear members.
Good evening.
Welcome you all for today's half-day seminar, which is a workshop on deep dive into FCRA provisions. I request CA Kavita Parmesh, Chairperson of Handbook branch, to escort today's speaker, CA Sanjay Agarwal, onto the dais. And welcome him to the book, which is a symbolic representation of the knowledge. I request CA Kavita Parmesh to give the welcome address for today's lecture.
Thank you, Shripa, and good evening to each one of you. Welcome to the study circle meeting, rather half-day seminar on the FCRA. So, also I warmly welcome our speaker of the day, so Sanjay Agarwal sir. So, when we were looking at this FCRA session, because a lot of things happening in this space, and we wanted the best person to advise and take us through this whole subject, because he is known. I have been studying his books since my articleship days, and then it was like a moment of very important moment for me when I reached out to him and then requested him to address us. He agreed also, and many things I have learned from his books. Definitely I know the value which he will be able to bring today. The handbook itself is I would say it's an encyclopedia on the handbook. What he has written is an encyclopedia on the FCRA provisions. End to end, any doubt you get, it is there, it is covered in the book. Believe me, I have read it multiple times, and every time I read it, then there is a new learning for me. So that's the kind of coverage which is there in this book. So definitely we have the best speaker with us, and it will all be helpful for all of you. Take the advantage of it, ask all your questions, feel free to ask all your doubts and then get that clarified. Apart from that, branch is always in the attempt to give you that which is required on a day-to-day basis for your working, which makes your advisory to the clients or work on a day-to-day basis easier. So we would request all of you to give your suggestions on what other subjects do you want the branch to conduct, and what are the kind of topics which you would want to discuss, which will be a good insight for us also to take it from you all. I would request you to give that feedback. I have a good learning. We have a couple of other programs coming up. 21st, that is next Thursday, we are starting the series of sessions on the new Income Tax Act 2025. The first day we are starting with the interactive session with the income tax officers. So that day the principal CIT and also most likely Chief Commissioner of Income Tax also will be present here. So that we are starting with the kicking of the entire series with that, with an interactive session, and post that we are having K.K. Chaitanya sir and Krishna Upadhyay speaking on the salaries and the transition provisions by K.K. Chaitanya sir. Apart from that, 22nd we are having a cooperative Society's audit one-day seminar on that, and 29th FEMA. Many of you requested for FEMA workshop. This is going to be a workshop where you will learn to practically how to handle the day-to-day activities. That kind of a session what we are planning. So please do register and take benefit of it. Thank you and have a good learning. Over to Srikanth.
Thank you, Chairperson. So, I think kind of introduction of the speaker has been already given by CA Kavita Parmesh, but it's my privilege to introduce today's speaker. So, CA Sanjay Agarwal is a chartered accountant and a graduate in commerce from Delhi University. He is a member of ICS since 1986, has over 30 plus years of experience in providing assurance and advisory services to the non-profit sector across India. He has conducted financial reviews and system assessments for over 1,000 NGOs and advises both grant makers and NGOs on grant management, accounting and regulatory compliance. He has facilitated numerous workshops across South Asia and has developed risk management systems, grant monitoring tools and accounting manuals for the sector. He is a regular writer on NGO related accounting and regulatory services issues. His publications include Accountable Handbook on FCRA, NGO accounting regulation and DAN and other giving traditions in India, He has also co-authored the India chapter in Philanthropy and Law in South Asia. With this brief introduction, I present before you today's speaker, CA Sanjay Agarwal. Over to you, sir.
We are trying to cover today is FCRA, and as all of you know, FCRA is Foreign Contribution Regulation Act. But when I started working on this, almost very few people knew what FCRA was. So over the last 20-30 years, I have learned from gatherings like this. All of you have individual experiences which help us learn from what challenges you face. So in this session, what we plan to do is to give you an overview of FCRA and then touch upon some of the challenges that people are facing in terms of dealing with FCRA. And then finally, I want to show to you, there's a very, very important amendment in FCRA which is coming up, which is pending in the Parliament. If time permits, I will take you through that. Okay. So before we start, let me formally state that what we are discussing here. We are only hoping that we will have better clarity on FCRA. There is no intention here to bypass or to flout the law or to manipulate the provisions. So at the same time, what happens is that when I say something, it has to be contextually. So when you are dealing with your clients or in your situation, please do get expert advice, specific advice, because what I am saying here may not be applicable to you in each and every situation. Right? So let's start quickly with the background of FCRA. So the background of FCRA actually it goes back to the late 60s, and if you remember, in the 70s there used to be this thing called the foreign hand. And that foreign hand was actually very much a reality, because at that time CIA and KGB were both engaged in how should I say, manipulating or taking over a country's governance. So in the late 60s there was a proposal in the Parliament, there was a discussion in the Parliament, and based on that FCRA was enacted eventually in 1976. Now this 1976 FCRA, it served its purpose very well till about 2010, and in 2006 the government had actually they brought a different bill to replace the existing bill, because a lot of it had changed by then. So in 2010 what we had was the new FCRA 2010, which is what I'm going to talk to you about. And one of the very see, when we talk about FCRA, what is it that FCRA wants to do? What is the purpose of FCRA? FCRA is very different from FEMA. So the purpose of FEMA, for example, is to conserve foreign exchange. So FEMA tries to encourage bringing in foreign exchange and holding it. For example, the government is now saying that we should use less petrol, or you should not buy gold. All these things are all the measures to conserve foreign exchange. In Foreign Contribution Regulation Act, the objective is quite different. Although FCRA is also connected with foreign exchange, but the objective here is that the foreign exchange which we get is more of a threat or a liability for the country. And that is the idea which Mr. Chidambaram, when he was presenting this bill in the Parliament, he put out. So as you can see, what he said was that, and this is the first time this clarity came officially from the government, that the FCRA bill or the FCRA Act is designed to prevent the domination of social and political discourse in India by use of foreign funds. So what he also said was that, if the money that is coming into is related to welfare, then we are, fine with that, so long as it doesn't try to change the narrative of the discussion. Now this point was re-emphasized a few years later in the FCI department. They published an annual report, and there the secretary had said this very clearly, that our policy is not to encourage soliciting of foreign money. So when you're, when your NGO client or some NGO thing thinks that they are doing the country a favor by getting foreign exchange. That is not the case. We are not bothered with that. That's what the secretary said. But we will accept it, or we will tolerate it so long as it's so bona fide welfare activities. Now these two terms, bona fide and welfare, these are key to your successfully navigating FCRA. Because let me tell you, currently FCRA is enforced in the most rigorous manner in its life. And they go very deep, and they, I think the branch has named this session very nicely, deep dive, because they really deep dive into the books and the records of your client or your NGO to figure out what are they really doing with the money. So, as long as they are restricted to doing bona fide welfare activities, the FCI department is happy with that. But the moment they step off that track and they get into things like environment, or they get into things like human rights, etc., that is when the trouble starts. So this, the statement made in 2013 was reinforced by the NSA, by the National Security Advisor, in 21, when he said that he added a new dimension totally to it. He said that what the FCI department is under Ministry of Home Affairs. It is not under the Ministry of Finance, and that is one of the reasons why you face so many difficulties, because the Ministry of Finance is a different mindset. That mindset is to encourage the flow of revenue. They are focused on revenue. But MHA is not bothered with the revenue. MHA gets worried when you bring in too much money. So, very different from what happens with Ministry of Revenue or Ministry of Finance. So, the National Security Advisor said that what the world is doing is, what foreign powers are doing is that they are using what is called fourth generation warfare. All of us have 4G on the phone, some of us have 5G also. So here he's talking about that fourth generation warfare. According to him, the fourth generation warfare means that the foreign power will suborn the civil society, or will sabotage, or they will sort of convince the civil society to support their causes, what they want to achieve as a matter of policy. Now this is not something that is new. It is actually there in Arthashastra. So if you go back to Chanakya's time, you will find that Chanakya's society also had a civil society. And Chanakya advocates that use these people to spread strife and to destabilize your enemy's kingdoms. So the government is firmly entrenched in this viewpoint. This is a viewpoint which is obtained across governments, whether it is the Congress government, whether it is the NDA government or the BJP government, or the Communist government. All governments are very, very allergic to foreign contribution. Now, about 2-3 years ago, the Home Minister was speaking at a meeting, and he also made the statement that we are this FCRA bill which we had modified. So 2010 the bill came, and in 2020 there were major amendments. In 2023 he said that we will revise it again. And I think those are the amendments which are now presented in the Parliament. So currently what is happening is that the FCRA says that there cannot be any political activity which is supported or linked to foreign contribution. Secondly, you cannot undertake any program activities without FCRA. Now when I say program activities, this act applies not only to NGOs, it applies to companies also, it applies to individuals also. So for example, as an individual, if you start receiving money from a foreign source and start doing programs or charitable activities in your neighborhood, then technically you are under, you are violating FCRA. That was not the case before the 2010 Act came. And the third thing which happened in 2020 was that the government put a stop to re-granting of funds. So what would happen earlier was that one large NGO would receive the funds in bulk and then would sort of redistribute it across the country to other NGOs which had FCRA. So the government stopped that. And that is of course changed the dynamics of the entire sector, the way it works. Now, the problems that NGOs and their advisors have been facing is essentially this. That one is that the interpretation of FCRA is very, very uncertain. When you're dealing with income tax or even with GST, there is a lot of case law. There are a lot of guidance available. Even the CBDT comes out with circulars, etc., and explains to you what is to be done, what is the position of the government. That is hardly the case with FCRA. The interpretation of FCRA also largely depends on the person who is actually running that department at that time, and that running is relatively opaque. So we are not privy to what the government is thinking or what the department is thinking. Because Ministry of Home Affairs, by its very nature, is a secretive ministry. It is not, a public-facing ministry. Second thing is uneven enforcement. So your neighboring NGO may be doing X thing, and nothing may happen to them. But if you do the same thing, you may get caught. So it's like sometimes it happens like you are jumping a red light and you get caught. But there's another vehicle which is jumped the red light, there's nothing happening. It's a little bit like that. The third thing is that timelines are very, very unclear. So, for instance, the FCRA law says that you should file your renewal application 6 months before the due date, before the date you due for renewal. Now, what does that mean? Typically, you would assume that means that you should file it at least 6 months before that. But what it actually means is that you should file it within the last 6 months. Okay? So if you file, for example, it a day before, a day earlier than 6 months, then the application will not be honored. Then the government came out with a clarification, that you should file it when you are in the 6th month or in the 5th month. You should not file it, within the last 4 months. So again, you see these fine points, they actually create a lot of problem for NGOs and for practicing accountants because they are not always aware of these things. These things are not there in the law. If you're reading a law or you're reading from the book, then you tend to miss these things. And then of course there are frequent modifications. So quite often you are not aware of what is the latest modification. But the good thing is that the FCRA department is a very nice website, fcraonline.nic.in. And if you regularly visit that or before you are doing anything, you are likely to be aware of the latest requirement. In essence, what we see is that the relationship between NGOs and the FCRA department are like a couple who've been married for a long time. So they keep bickering, they keep fighting with each other, and they keep hiding things from each other. Sometimes, they keep also blocking each other's roads. So, but NGOs and FCRA department, fortunately, they have also coexisted for so long. And once a good understanding develops, that means that the FCRA department starts trusting NGOs and the NGOs start, honoring the FCRA department's, directives, then the relationship will become smoother. Okay, so I will now briefly go into, please, if you have any questions which you cannot hold back, please ask me now or we can do it later. Anything that? Okay. So let me just share some key concepts with you. 3 or 4 concepts only I will share. FCRA is actually a huge law. I was telling Kavitaji that we should really have a full day for it. But I know you cannot take out that much time. So first thing is what is foreign source. So when I talk about foreign source actually has simply it means that anything that is under the control of foreigners is a foreign source. Right? So if there is an Indian company which is controlled by the foreigners, then technically that would be a foreign source. Similarly, if there is a foreign company which is controlled by Indians, unfortunately that would also be a foreign source. So for example, Vedanta. Now Vedanta is owned by Mr. Agarwal, but it is registered in London. So therefore, because it is registered in London, it is controlled by UK law. Therefore, it needs to be a foreign source. So any source which is under control of foreigners. Second element is that specified item. So first, foreign source. The second is specified. What are the items which are specified? Essentially, any item means article. For example, if someone gives you a computer, if that person is a foreigner, and they give a computer, an old computer, old furniture to an NGO or anyone who is doing program activities, then FCRA would kick in. Second thing is currency, and third thing is security. These are the things which are specified in law. In practice, what the FCRA department started doing is that they also say that if you are providing any advantage to an NGO by meeting their expenses, for example, then that is also an indirect form of contribution. I will take the example of Greenpeace. So Greenpeace International deputed an employee to Greenpeace India. And this employee was being paid by Greenpeace International but was working for Greenpeace India. So FCRA department said that, well, this is a violation of FCRA because you are indirectly providing FCRA function. Similarly, in the latest development it has been that where, for example, an NGO published a report. In the report, they said that this report was possible with the non-monetary collaboration of another NGO. The FCRA department has said that, well, this is a violation because you have actually provided advantage to the other NGO. Many of these interpretations are very, very, how should I say, very, very unclear or very, very unreliable. However, in practice, it is very difficult to deal with the problem that arises because whenever the FCRA department takes a stand, they will suspend your FCRA or they will cancel your FCRA. Once your FCRA is cancelled or your FCRA is suspended, then you lose access to all the money that you have. Your staff start leaving, your advisors are not available. So it is in effect a very, very big setback. So we will constantly emphasize that what you must do is try and not get into a situation where the FCRA department takes action against you. It is better to avoid that action rather than fighting that action. The third element is non-commercial transaction. So if you, for example, I as a chartered accountant receive money, fees from a foreign client, you receive fees from a foreign client. That will not be treated as foreign contribution because of this provision that the transaction should be a donated transaction. It should not be it should be a non-commercial transaction. It should not be a commercial transaction. So essentially, if we put all these three elements together, foreign source, article currency, and donated transaction, then the portion in the center, which is intersecting, that portion only is foreign contribution. Where all these three elements meet. This is a very, very essential and key concept in FCRA, and you should be clear about this. Once you are clear with this, you will be able to, for example, is this clear? Ji.
So if the individual is a foreign Indian citizen residing abroad, but from his Indian source, where he is having a PAN and he is contributing to an organization, from a foreign source or an Indian source.
So this depends on citizenship. If the person is an Indian citizen and they are contributing from their own sources, whether in India or abroad, that will not be foreign.
From an NRO account?
As long as the money is his or her own and the person is an Indian citizen, they will be wrong. Sure.
It's an Indian source.
So is this concept clear? So I am going to ask you a question. Is this foreign contribution?
Yes.
Yes? Okay. How many people are saying yes? Very good. Excellent. How many people are saying no? Oh, so more people are saying no, so therefore no is the limit. See, the question is that it depends on the source. It is not, the question is currency is not important. What is important is who is living it and for what purpose. And what about this? So again the source. So for example, if an American comes to you and gives you this money, then that will be foreign contribution. if a Nepali gentleman comes and gives you this money, again it will be a foreign contribution. But if an Indian is giving you this, it will not be foreign contribution. So let me expand a little bit on the key element, that is foreign source. What is foreign source? I will try to explain. So broadly speaking, there are three types of foreign sources. One is individuals, which is essentially citizens. The second is agencies, donor agencies, etc., or multilateral or bilateral agencies. And the third is businesses. So these are the three main categories. Within this, let's talk about individuals. Is very clear. Anyone who is a foreign citizen is a foreign source. Anyone who is an Indian citizen is not a foreign source. Anyone who is a PIO, person of Indian origin, would that be a foreign source or a non-foreign? Sorry? Correct. Because a PIO is always a person who is a foreigner, who has become a foreigner, who is taken foreign citizen, and that is why they have a PIO card. But in NRI, may or may not be a foreign source. NRI is simply someone who is living abroad. So in terms, the second thing is clear, agencies, for example, donor agencies like Oxfam or the Ford Foundation or many of these Plan International, etc. These are all foreign donor agencies. JICA, Japan International Cooperation Agency. Third category is businesses. So on businesses, let me explain a little bit because there is a confusion here, especially with regard to CSR. So if a company is formed abroad, outside India, then it automatically becomes a foreign source, as I mentioned earlier. Then second thing is, if a company is a subsidiary of a foreign company, this is a contested interpretation. In our view, a subsidiary of a foreign company is also a foreign source. And the third, of course, is a foreign MNC. So, for example, Microsoft or even Suzuki. These are all foreign sources because they are foreign MNCs. But if, for example, Tata set up an MNC, and that MNC is, it is an Indian MNC, therefore, that may or may not be a foreign source. So let me explain this, second bit a little bit more. So when you are dealing with subsidies, foreign subsidies, what you have to see is that if the subsidy has been formed outside, if a company has been formed outside India, then obviously it is a foreign source. If it is a subsidy of a foreign company, then again it is a foreign source, as I explained. If it is a part of a foreign MNC, again it is a foreign source. If more than 50% shares are held by foreigners, by individuals and foreigners, but it is not a subsidiary of a foreign company, it will not be a foreign source so long as that investment is within the FDI norms. But if the investment is beyond FDI norms, it happens sometimes temporarily for a day or two, someone's investment may overshoot the FDI norm. In that case, temporarily that company would become a foreign source. But no one in practice goes to that level of detail. Broadly speaking, this is the categorization. This is a very, very tricky definition. So in the FCRA handbook, we have tried to explain it in great detail with the case law, etc. And you can look it up. Okay? So any questions or issues on this? Right. Let me now quickly, yes ma'am.
So sir, the previous slide you talked about FDI norms, that came as a reference of FEMA, right?
Yes. The FDI norms begin in FEMA.
As per FEMA.
Correct.
So knowledge of FEMA is definitely a related.
It is, yes. So the thing to remember here is that because you are under FCRA doesn't mean that FEMA doesn't apply. And because you are under FEMA doesn't mean that FCRA doesn't apply.
Why is the status of subsidiary of a foreign company ignored and deemed as a foreign source? Because the company has independent status, it is registered and it has got all kinds of compliances, everything and all. Just
Correct.
because it is a subsidiary of
Correct.
foreign company, can this company funds or does CSR obligations, all that kind of a thing? Can it be ignored that it is
Okay, so this is actually a very, very complex question. And in law it is very clear. In practice what happens is that it depends on what the company says. If the company says that they are non-foreign, then the money is treated as non-foreign. If the company says that we are a foreign source, then the money is called an FCI. And FCI department has been keeping quiet on this. If you ask them that what do they mean, what is the interpretation of this clause, they will simply show you the law. They will not give you an interpretation. But to answer your question, sir, think of it like this, that if East India Company was to set up a subsidiary in India, would you treat that subsidiary in India as a foreign source or not? The answer to that question goes back into the purpose of FCRA. The purpose of the FCRA is to protect the sovereignty of India and not to protect or enlarge the commercial interest. That is the reason why, in our understanding of the law, a subsidiary of a foreign company should be treated as a foreign source. The confusion has arisen because when Mr. Jaitley in 2016 and 2018 he amended the law to facilitate CSR. HDFC under the previous law before 2016, HDFC or even ICICI, because more than 60% shares were held by foreigners, they were treated as foreign source. So responding to that criticism, he had amended the act. But in that amendment, confusion arose, and therefore even subsidiaries have, in practice, many cases they have gone on to that way. Our advocation is that you rely on the declaration of the donor. If the donor says that they are a foreign source, it is foreign. If the donor says that they are a non-foreign source, it is non-foreign. If the SCI department comes and disputes that, pay 5% penalty and the matter is over. Yes, sir.
the same subsidiary being this company being a subsidiary of foreign company, if there are CSR obligations, if it pays money to another charitable trust, is the charitable trust liable to disclose everything and all as if it is received from the foreign source?
Yes.
If the prior registration.
See, sir, if the CSR company is treating itself as a foreign source, then they must give the money only to a trust with FCRA registration, and the money should be deposited in the FCRA bank. There is no doubt about that, as long as the company is clear. Now what is happening is that many companies are not clear about that, or they keep changing their stance, and that is why the confusion. There is no exemption for CSR fund as such. So coming to records, so in terms of records, very unique provision is there in FCRA, which unfortunately some of us are not aware. Right from the beginning, FCRA said that please maintain a separate set of books for all FCRA transactions. And separate set means separate set. That means if you are using Tally, then you should have actually a separate company within Tally. Maybe you can have a group company where you can group the company, but please keep a separate company under Tally. And when you are finalizing the accounts, please ensure that your NGO's FCRA accounts are prepared separately. So 3 sets of accounts, or rather 2 sets of accounts, one for FCRA and the other for consolidated. So consolidated ones go to Income Tax Department and the FCRA ones go to FCI Department. We had a very, very strange case where an NGO were maintaining separate books of accounts, but their auditors were not reporting separately on the FCI transactions. They prepared one set of accounts which was filed with the FCI department. And the FCI department took objection to that and they imposed 1.75 crore rupees as penalty. And while this process was going on, the notice came to the NGO on, let us say, 12th December. And while this process was being discussed, on 17th December, the NGO filed the next year's accounts also in the same manner. So 50 lakh rupees additional penalty was imposed on that. So this is a very, very critical provision. Please ensure that the books are separate. And separate means, FCI department also almost has a COVID mentality on this. there should not be any mixing of FC and non-FC fund at any stage. I will explain that.
I have a question on separate set of books. If my receipts were to be of multiple sources, from multiple sources, applications are also multiple sources. Just because I have 2 or 3 receipts from foreign source and which are applied for various certain purposes, why do you, and it is a basket of funds, comes and goes like a working capital. Then what do you mean by separate source of money? Because out of foreign source, I am not acquiring any particular property. It goes for charitable purposes, salaries, everything, all kinds of expenses, outflow of money for charitable purposes. What do you mean by separate set of books? And how do I distinguish that this transaction, there is no cash trail?
No, so that is something that we will explain as we go forward. Just wait for a couple of slides. So as you can see in this chart, what you have is, first of all, in FCRA there is a requirement that there should be a separate bank account for FCRA funds. And there cannot be any transaction between FCRA and non-FCRA funds at any stage. In fact, we jokingly tell NGOs that not only should you keep separate books of accounts, you should keep separate records, which is of course a legal requirement. You should totally also have a separate door for FCRA staff and non-FCRA staff. Otherwise, there may be some mixing of employees there. But in practice, what happens is that all the funds that you receive for FCRA out of foreign sources, they must be deposited in a separate FCRA bank, and they should be accounted. So you have to have a separate. You have to treat it like a separate entity altogether. And anything that you spend for the FCRA funded projects, that must be tracked and accounted separately in those FCRA books. Separate vouchers, separate records, separate entries, everything should be separate. There cannot be any transfer from, so suppose you are running short of funds in non-FCRA books. Can you transfer money from FCRA to non-FCRA? No. If you are running short in FCRA books, can you transfer non-FCRA? No. The moment you do mixing of funds, it is considered a more serious offence by the FCRA. Because their mechanism is that we want to isolate the FCRA transactions and be able to review them very carefully.
So let's say we have spent from non-FCRA account on FCRA project. In the sense, some property has to be purchased, some stamp duty, and can it be reimbursed from FCRA?
No, you should not do that. See, and this is what we are going to, when we end this session, I am going to show you the proposed bill which is in the parliament right now, and that is designed to address this very problem. So, even in case, for example, there are people who purchase a vehicle, and when they purchase the vehicle, part of the funds they use your FCRA funds. Now, technically, that is mixing of funds. So, if the FCRA assets are seized, then the entire vehicle will be seized. Let's say this auditorium. So, auditorium was built with, maybe this auditorium was built with FCRA funds, but the rest of the building is with non-FCRA funds. If this entity uses FCRA, we're just using it as an illustration, then the entire building will be taken over by the FCRA part, because they cannot segregate this part.
Is there any restriction of type of expense, like admin expense cannot be there, admin expense can be only this much?
I'm sorry?
Type of expense restriction is also there in foreign.
Type of expense means that you can only spend money for bona fide welfare activities. So that is essentially what is catch.
So there will be admin side also.
Yes, yes.
That is allowed.
Administration is allowed. I will deal with that later on.
These laptops and other equipment should be used for across all the projects. Practically, it will be FCRA and non-FCRA. Whether there will be any objection from the FCRA department?
They have not so far objected. But if they are listening into our conversation, then I am sure there will be a clarification. So in terms of, so this is a scheme of books which I have tried to show you here. That maintain one company for tally. Within that, you set up group accounts for project wise, because each donor says that my books should be kept separately. But so therefore, earlier what NGOs used to do was that they would keep, let's say they had 50 donors, they would keep 50 sets of books. FCRA department doesn't accept that. They say that you have to keep one set of FCRA books. So some NGOs even started keeping 50 books plus one consolidated set of books. So all that is not required. This structural solution which we are showing you, that will resolve the problem.
Statutory liabilities, so one person's salary will be split between
Yes.
FCRA and non-FCRA, PF, PD, all those can be
So
paid from
in practice what happens is that you, generally PF is a big problem. So I think now what they do is that they make a main challan and then they make a supplementary challan. So what you should do is that the same person's name should not appear on both the PF challans. You can have, how should I say, disproportionate PF contributions. The person is getting salary from both FC and non-FC. Then make sure that his PF contribution is made only from FC. Reduce the salary there and the PF, increase the PF there. So in terms of separate records, every record that you keep must be separate. This is segregation at the highest level. So whether it is salary register, whether it is fixed salary register, investment register, stock register, every record must be kept separately.
Sir, in your earlier slide, I have a doubt. When you say a group company, is a cost center mapping of a accounts or expense head or a project wise, will that be considered as a separate books or?
No, so this is the solution that group company is only to consolidate all the three sets of books. So you see under law, you need separate set of books for FCRA.
Right.
Under section 11, 4A of Income Tax Act, you also need separate books for any income generating projects, commercial activity.
Right.
Plus, therefore, what you have left is charitable activities which are non-FCRA. So third set of books for that.
Right.
Within that, each donor says that you can make separate books for me.
Right.
So there we can use grouping or cost centers to create the reports which are required for them.
Okay.
But open three companies, consolidate them through a group company, and at the project level, you have group accounts or cost centers to resolve. Now, one of the biggest innovations and the most serious inconveniences that occurred to NGOs was in 2020, when the government said that you have to bring all the money to one account, the Gateway of India, which is like the SBI NDMB, which is in Delhi. So every NGO was required to open their account in this, and that became the primary inflow account. Someone was telling me that this was Mr. Amit Shah's brainwave. The idea behind all this was very simple. There is a secret list which is called prior reference category. Have you heard of PRC, prior reference category? No? You haven't heard because it is a secret. So this PRC is actually has been maintained since 2012 by the government. And any donor who is found to be doing things which are not appreciated by the government of India, they are put on the prior reference category. The banks were told from 2012 to 2020 that whenever you receive money from a PRC donor, you should first clear it with us. Then only credit the money in the bank account of the NGO. But the banks were not able to do that because it was a very, banks are dealing with hundreds of thousands of transactions every day. They do not have the bandwidth to do this. So quite often many of the remittances were slipping through. So to block that, the FCRA department, they announced that you have to bring all your money through this one central bank account, which is called the designated FCRA account. And after that, you can move the money to your utilization account or wherever you need the money to be. So that is one of the very how should I say, harsh and very cumbersome procedure, because now obviously if you had a problem earlier with your FCRA bank account, you could just go to the bank and talk to the manager, but now you can't do that. So a lot of problems arise because of that, but nevertheless it is in the government's wisdom that they have done this. We can't really complain. There are many nuances related to that, and if we have time, we'll explain that. For example, if you are investing FCRA funds in fixed deposits, or let's say in share market is of course not allowed. They say that any speculative activity should not be undertaken in FCRA funds. Even with fixed deposits, what has been happening is that in some cases which have come to the notice of the department, the money was put into fixed deposit, and when the fixed deposit was encashed, the money was taken to a non-FCRA account. So the department lost track of that, and that was discovered only in the FCRA account. So they are frowning and they are discouraging the putting of money in fixed deposits also. Their position is that the money is, you receive the money, don't sit on it, spend the money. So that we are no longer worried what you will do with the money. In terms of returns, what is very important is that every year you have to file, which form have to file? SC4, yes. There is another form which you have to file if you receive any contribution in kind, and that is called FC1. This form is also filed online. If, for example, if an NGO has given you, a donor agency or any foreign donor has given you a laptop or office furniture or anything, a vehicle, even bananas technically, and no one is going to report bananas, but anything that is worthwhile, then that must be reported in FC1, and that has to be filed by 31st December, and that then FC value of that FC1 items should also be reported in your FC4. Now FC4 is your annual return, which is very critical now, because any mistake in the FC4 and you are likely to get into deep trouble. I will explain a little bit. So you have to file it online, of course, and when you are uploading it, you have to upload the signature, seal, there are attachments. They have explained all that there. The CS certificate also. Plus, you have to upload all the attested bank statements. That means all the FCRA banks. All the FCRA bank statements must be uploaded with your FC4 return. Each and every page of that bank statement must be signed and stamped by the bank officer. If you get it signed only on the first page and not the next few pages, that can be treated as a violation. And all the FCRA bank account, not just your designated FCRA bank account. So, the department is very particular about these things which we've had a more friendly administration in the income tax department. But in the FCRA department, the administration is not so friendly. There is also a problem that you cannot revise your FC4, for example. So if you make a mistake, then that mistake stays. The bank officer, where your bank account is. Now, the nil return, if you do not receive any FCRA funds, or you do not use it, then also you have to file FC4. Only facility there is that you need not file the audited account or CS certificate if no FC is received. Yes.
So you say bank account, you need to say only current account or it includes FCRA.
I'm sorry?
When you say bank account, whether you need to say only current account or it should include FCRA.
All the FCRA bank accounts. See, an NGO can have a savings account as well as a current account. It is NGOs are allowed to have both types of account. Whichever type of account it is, if it is FCRA account, then that maximum must be included.
What about FDs?
No, FDs are not bank accounts.
If the employees of a MNC company being a subsidiary of parent company, they get gifts and laptops and everything and all. Are they supposed to, because it is a foreign source, are they supposed to file
That is the
FCRA?
first part of the question. Can you say that again?
No. Employees of a MNC company considered as a foreign source. They get gifts and then laptops and all this.
No, that is for their own consumption. An employee getting it for their own use and consumption, therefore they are
But it is a foreign source.
It doesn't apply. So for example, let's say that you are an employee of foreign company,
Yes.
right? You get salary or you get gifts. It is part of your emoluments. It is part of your own this thing.
No.
It is not used for program activities. Now, if they are going to give you that money and say that please use this money or this equipment to do charitable activities, then FCRA will apply. Otherwise, for example, as an individual, let's say that you lose your house, or there is a child or there is a student who is receiving a scholarship from abroad, then there is no FCRA requirement here because individual is exempt for when they receive money for their own use.
There is no limit for own use.
There is no limit, but I hope you are not thinking of anything naughty. See, let me tell you, sir. There was a time when people could do many things and get away with it. There were times when people were receiving foreign funds, FCRA money, into their individual savings account and running programs. That time is gone now.
No, for own consumption, genuine own consumption.
Genuine on consumption, don't worry.
No limit.
Yes, but please remember that if the transaction is extraordinarily large, then it will come under scrutiny. Secondly, if after receiving the money you register yourself for municipal corporation election, or panchayat election, or state elections, then again you will have to file a declaration and that will come under scrutiny.
As filing of FC1, is it based on the source or otherwise the purpose for which it is going to be used?
I'm sorry, I missed that question.
The filing of FC1, I received something, okay, either for my personal consumption, purpose and utilization comes later. First is the receipt, then application.
So FC1 is to be, this FC1 has to be filed only by FCR registered NGOs. There is a separate FC1 which is to be filed if an individual receives from a foreigner who is a relative more than 10 lakh rupees in a year, then there is a separate FC1 to be filed. But that we are not covered here.
Non-related.
That is not covered.
I am an individual, I receive money in the form of, from a foreign source, unrelated person, I may
Not
support
required. It is for your own use.
our own, yes.
They are not required. So like I said, that FC4 is a very unforgiving form that if you make a mistake you cannot revise it. In income tax, actually when I look at FCRA I realize how friendly income tax people are. So sometimes what happens is because you have to report the funds project wise. So sometimes you have borrowed from one project to another project. Therefore you will have a negative balance in that project. But you cannot report that because FC4 does not accept a negative number. So you have to ensure that there is no interfund borrowing, or if there is interfund borrowing within FC funds, then it is settled before 31st March. Otherwise you will have a problem. Then, of course, as I said earlier, absolutely no interfund transfers between non-FCRA and FCRA. This we've discussed, but if you do make a mistake in FC4 and you feel that it is a critical mistake and you have to correct it, then you should contact the FCRA department. They have the power to make that revision. One of the very, very important changes that has occurred last year in the FC4 is that now they want you to give program details in the FC4. So earlier there was no clarity on this, but now they revised the form. And what you have to do is that each and every project must be listed separately. You cannot just say charitable activity, you cannot just say education. So within education, what are the projects that you've done? So each project must be listed separately. And each location where that project is being run should also be listed separately. As you can see, it says address or location also must be specified. This table must also then be certified by the CA. And there is a reason for this. I will explain to you. So, you may have heard of, there is a person called Three Idiots. What is it? No. There is a movie called Three Idiots. What was that hero of the movie? Yes. No. The innovator. Wangsu. So the same person, actually it is based on his character, he is actually an activist in Ladakh. His NGO had filed a form where they used a very unfortunate wording. They said food security and sovereignty. It was 5 lakh rupees. They said food security and sovereignty. This is what we have received amount. Now, at that same time, there was an education to Ladakh. Ladakh was asking for separate statehood and everything. And the department said that this means that you are using foreign funds for asking for sovereignty. There is a concept in the NGO sector, food security and sovereignty means my right to choose what food I have. For example, I do not want Kellogg's for breakfast. Then you should not, make it difficult for me to, not have, for example, something else. Many companies do. I was speaking to someone. You remember when you were young, you were fed Protein X every day. Protein X was mixed with milk, right? Anyone remember that? But Protein X actually contains no protein. It is largely sugar. But mothers were, brainwashed into believing that if they fed Protein X to their children, the children will grow stronger. So that is the concept of food security and security. That the MNC should not make choices for our food matters. But that was listened to. So what you have to do is you have to ensure that when FC4 is being filled, then it does not use words which are jargon or which can confuse the FCRA department. Use common sense, use clear words, do not repeat the title of the project verbatim, because quite often the NGOs use a lot of jargon which can trip up people. For example, there is a concept called institution building. People who have worked with NGOs, they will have heard this phrase called institution building. Now, institution building is not a physical building. It simply means that you have created a sort of a social structure. For example, we have the judiciary. Judiciary is an institution. The CA is also an institution. It is not the same thing as the institute's building. But using these two words can confuse the FCRA department because they are not very familiar with this jargon. So please use this carefully. And you do not need to name the donors in FC4, that is named separately. Project names, as I said, that wherever possible, you should emphasize the relief and the welfare aspect of the project. Because ultimately most of the projects are designed for relief and welfare. But some NGOs continue using old terminology, old language, which implies a rights-based approach. That should be avoided. Project name should be closely related to the relief or welfare, because that is all you can receive money for. Another change in the FC4 form is that where, for example, some NGOs they purchase assets, but they report it as utilization. They do not capitalize assets. Now that is a legitimate thing where the assets are being distributed to the community. For example, let's say that you are setting up a cold freezer in a dairy, which is run by women in a village. Then that is a legitimate write-off. But otherwise, you should capitalize fixed assets. So they are saying that if you are reporting any fresh assets, but you are reporting them in utilization, then that should be identified separately. Similarly, the utilization table, as I mentioned earlier, that should be audited by the auditors, which means that you are putting a stamp on it. And remember always, people who are doing bank audits or who are certifying bank loan know that the government, the institute stamp, the CA stamp does not come without a liability. If you are certifying something, there is a big likelihood that someday you will be asked to explain what you certified. So please make sure that your working papers are clear. Third thing that they've done is they've said that in the FC4 there is a section where the NGO is required to confess or self-declare 15 questions that they have violated or not violated. So earlier it was based on the NGO's declaration. But now the FCRA department is saying that the CS should also certify this. So all this might seem that you are going to do more work, but please remember that you are not going to get more money because you are doing more work, because ultimately NGOs don't really have money to pay. So these I mentioned just now, and these are the questions. One of these questions is certification of administrative expenses. Now that is a very, very tricky issue, and let me explain briefly what I mean by that. See, till 2010, there was no requirement of separate reporting of administrative expenses. There was no restriction also. In 2010, the bill that was introduced initially came with a 30% restriction. At that time, NGO said that this is too low. So, I think Madam Swaraj, what was her name? Sushma Swaraj. She was, heading the committee at that time, and she allowed it to increase to 50%. So the allocation of administrative expenses was increased to 50%. Now, actually, NGOs were not reporting 50%. They were reporting very little. So the department eventually studied the pattern and they brought it down to 20%. Now 20%, the way administrative expenses are defined is very, very difficult for NGOs to sustain in many cases. So I'm going to take you through that, but before I do that, let me just take some medication. So this is the rule 5 where administrative expenses are defined. Now, because you will understand immediately that in accounting there is nothing called administrative expenses, right? That's a functional classification. So, and therefore in FCRA rules they brought out a rule where they defined administrative expenses, but they were defined in a very peculiar manner. See, if you see, the very first clause says that any remuneration realized by members of the executive committee is administrative expense. The second clause says all expenses towards hiring of personnel for management of activities of the program or salaries and wages is also administrative expense. So many NGOs thought that they meant only people who do a part of the management. But that's not what the rule says. It says for managing the activities of the organization. That means for executing the program activities as well as administrative activities. And that is why two provisions have been added down below. The second provision says that any expenses incurred directly towards the objectives of the welfare-oriented organization, for example, salaries of doctors or teachers, etc., that will not be treated as administrative expenses. Now, if in clause 2 they had meant that only program administrative staff or managerial staff are covered, then they would not put this provision down here. So therefore, ultimately what you have to do is, when you are certifying administrative expenses, you have to first identify the type of NGO that you are looking at. So NGOs we can classify into, four main categories for the purpose of this unit. One is training NGO, second is research NGO, third is welfare oriented NGO, and the fourth is all the other NGOs. Now the way the law is structured, the rule is structured, the training and research NGOs get some exemption of people who are employed for either providing the training or for collecting the data. The third category of NGO, welfare oriented NGO, get exemption for all the people who are directly engaged in providing welfare activities to the people, which means effectively all the program people are exempted. For all other NGOs who are not part of the first three categories, no salary of any staff is exempted. All the salaries of all the staff will be treated as administrative expense. So this is the manner by which FCRA department is trying to ensure that NGOs which have rights-based programs or other activist type of programs, they cannot receive foreign contribution. Because there is no way. These NGOs typically, they have 80%, 70 to 80% of their budget is on staff. If this, this provision is interpreted properly, then they will always be violating their condition. Okay? I hope this is not clear at all.
So how will you bifurcate between payments and 20%?
Payment and 20%.
When you are saying 20% gap, the cap what is given. So monthly is making payments. And if he receives contribution of maybe around 10 lakhs or 20 lakhs, and the expenditure, what the salary and administrative expenditure, if it is go above 3 lakhs, so we have to dissolve that 1 lakh?
No. It is actually calculated at the end of the year. Right? So at the end of the year when you are making the receipts and payments account, in the receipts and payment account you should identify administrative expense separately and all other expenses separately. Now fixed assets are not, for example, if you are purchasing fixed assets, that is not included in administration. So the base for calculating this is the foreign contribution received during the year. It is not based on the payments that you are making. It is.
Salary I will be making regular payment from the
Salary I will be making regular payment from my, maybe from SC account or maybe from my non-FC account.
Non-FC you are not bothered. This calculation only for FCRA.
So the payment, salary, see I receive contribution maybe in the month of October or November, but salary I will be paying monthly. So that salary will be, I will be paying it from non-FC account.
No, if that you are paying, whatever salary you are paying from non-FC account, that will be booked and accounted only in non-FC books.
Okay.
That is not covered under this. So that you cannot bring into the FCRA books at all.
Any payment I make it from the FC account relating to, so if I receive in the month of October 10 lakhs rupees, from November if I pay the salary, then I can account it. Otherwise, previously I cannot account that.
No. Ji.
So during the year, if I have only spent the FCA money, which I brought forward from the previous year, then on what amount the 20% will be applied?
Yes, that's a very good question. I have a slide on that, so just hold your question. Ji.
In case of a CEO salary, does it be treated as an administrative cost or a program expenses?
Ji, so CEO and accountants should always be treated as administrative.
But he also will create a program.
That is, see, the catch is that they should be working directly with the people. So, if it's a principal, for example, principal of a school, she is the CEO, then I can say that, she is directly working with them. Even, principals don't take classes at all. All the teachers take classes. The CEO's role is a little bit similar to the principal of a school. So, they are more involved in the administration of the organization and, other matters rather than the program activities.
Some percentage can be allocated or is completely
See, this is a very difficult question. As an accountant, I would say that yes, that makes sense. But FCRA department doesn't have any accountants. In fact, they don't want accountants in their department. They said very clearly, most CA should come to our office. So, it's going to be very, very difficult for you to. I mean, you can do this as long as there is no audit by FCRA department. If the FCRA department audit occurs, then there will be no catching. Many NGOs are doing it, by the way, but we do not advise doing that. We say that you should stay clear. In FCRA, there are two types of interpretation: grey interpretation and clear interpretation. Any grey interpretation will land you in trouble if the FCRA department comes to your office.
So, in administration expenses, they have listed out events, sir. So, if any field station is taken exclusively for a project, can that then be considered as a project?
Yes, that is typically what is done. Particularly field offices or project offices or wherever the activities are, we have to manage fitness program. Ji.
In case of restricted endowment, it is related to FC4.
It is related to FC4. In case of restricted endowment, how do we, where principal amount is intact, how do we show the utilization so that the interest will be spending?
So that's a very nice question. And I see long ago when FC4 was introduced, when we had FC3, there used to be one item called 56 number, item 56, which was corpus and endowments. So there, when you received the money, it was shown as received, and when you invested the money, it was shown as utilized. So what we say is that when you invest the money, in that year you should show that endowment as utilized and carry it in the balance sheet as an endowment asset. But in the FC4, you should, in the table 3, you should report it as utilized so that your FC4 becomes lighter.
Correct, but unutilized will not match with my cash in bank.
Correct. So that is where we say that your whatever endowment you have, that you should invest in fixed deposits, which are separately earmarked. Ideally, you should invest it in non-fixed deposit. But if you cannot invest in non-fixed deposit for any technical reason, then you should do it in fixed deposit. But earmark it separately, identify it separately, so that you can show it separately on the balance sheet. In that case, you need to report only the unspent balance related fixed deposits in question 4 or in table 4 of the FC4.
Can we do it now? So when we invest, let's say, anyway, it is within fixed
So there is a saying in Hindi, "Jab jaage tabhi savera." Whenever you wake up, that is the time to do it. But if you are doing it, then please add a clarificatory note in the accounts and just send a draft to me. You are from SUI, right? So just send a draft to me once so that we will review.
In your previous slide on the administrative expenses, there was the rent expense.
Rent. Yeah.
What is the place of the rent?
Typically your main office.
There are both. Where the main office is there and the activity also happens in the same.
So field offices are not treated as administrative rent.
But the same office, if the activity is also carried out, like the research organization, the training and the education.
See, there is no clarity on these issues. So auditors and the NGOs together have to take a call on this. And totally it is by looking at the place and applying your mind that you will get clarity. But broadly the principle is that the main office where administration mainly engaged in administration, that should be treated right. I mean administration. And the field offices should not be treated as administration. So with regard to the question of, like you said that I received all my foreign contribution in a previous year. And this year I have only incurred expenses. So recently FCRA department introduced this change in the way you calculate administrative. They are allowing carry forward. So through this table, which is now there in FC4, what they do is that they will allow you to. So suppose you are you receive 100 crores in a particular year, right? And you are allowed to spend 20 crores out of that on administration. But you received it at the end of the year, so you will spend only 1 crore. So 19 crores you can carry forward to the next year. And next year, then if you incur the rest of the 19 crore, that will be prohibited. But suppose you do not spend in the next year also, then you want to carry it forward to the third year, I don't think you can carry it forward. So it is only allowed as of now to the next year. We are also advising NGOs not to ask the donors not to rush with the money, to give the money to you in a slow and steady manner. Sometimes what donors do is that due to their own tax restrictions, they will dump a lot of money on you, and then you will end up holding that money and getting into trouble over that. Okay. One common problem that many NGOs are facing was the TDS issue. So you have, let's say you have fixed deposits out of FC funds and non-FC funds, and or you have other income also. And when you receive the refund of TDS, there is only one account you can receive. So they were not able to transfer the money from the. Suppose they specified the non-FCRA account for receiving the TDS refund, then they would not be able to transfer it to the FCRA account, vice versa. So the FCRA department came up with a clarification on that, and accordingly, what you should do is that suppose bulk of your money, the refund that is coming in, that is related to FCRA, or let's answer a simple thing. Bulk of the refund, the entire refund is related to FCRA refunds. Then which account should you give in the income tax refunds? FCRA bank account, okay? But do not give SBI NDMB. Give the utilization account number, right? Now, the second situation, that 10% of the fund is related to non-FCRA, 90% related to FCRA. Again, give the FCRA bank account number and transfer from there the balance 10%. Third situation, that 10% of it is FCRA and 90% is non-FCRA. You can take the non-FCRA account and deposit the money there. Ultimately, these are matters of choice. It doesn't matter because in either case, wherever there is part FC and part non-FC refund, you can transfer it to the other account. But a CA certificate should ideally be required, is sometimes required by the bank for that purpose. Okay.
Sir, it should be or it can be? It should be done or it can be done?
Meaning it should be done?
It should be done means that we have to do it. It can
Yes, you cannot see the problem NGOs were facing is that they were not able to do it.
Correct.
They should have done it, but they were not able to do it because you cannot deposit money from FCRA to non-FCRA. Now the department allowed this limited facility that for TDS refund, and they also made provision there for the interest earned on TDS. In the same proportion you can divide that. Okay.
Sir, let's see for when we report that assets, assets disposed of during the year of borrowings there is no disposal means I should have actually sold the asset and money should have come to bank account. There is no way I can report a depreciation or rather write-off. And they want to carry the closing balance with the balance sheet. So how do I address that?
So what you do is that when you are describing the asset in the line item, you would say depreciated value. That is one option. The other option is that you can carry your assets at gross value.
So gross block method is what we are doing now. Write-off is a separate. Do you think that by write-off they expect that there is a cycle?
Honestly, I am not sure exactly how it works, but what we have been saying is that whether you should ideally use WDV, and in the asset description, you are writing, let's say, vehicles, in bracket, write WDV. So each year you get those values only. This matter has been taken up with the FCRA department, they have not come out with a clarification.
Also, the FC assets are sold, that money has to go.
FCRA background.
So utilization account.
Yes. See, in the NDMB account, you should put only fresh receipts. You should not put reheated receipts. Now, this FC3C renewal I had mentioned earlier. So just to clarify this slide I have made. So first of all, let's say that this 15th October 26 is the expiry date for your FCRA registration. Right? Now, under law, the earliest date for filing that FC3C for renewal is 16th April 26. Okay? 6 months before that. And what the FCRA department done is, now they said that the last date for filing FC3C is 15 June. Now they have not said exactly it is the last date. You can still file till 15th October because the law still allows you to do that. But what they are saying is that we will not allow you an automatic extension if you file after 15th June. People who have filed between 15th April and 15th June, 16th April and 15th June, will be getting automatic extension, like you have all experienced in the past. But people who file between 15th June and 15th October or thereafter will not get that automatic extension. Okay? So, finally, on the provisions, etc., compounding. You know what compounding is? What is compounding?
Clearing the violations.
Right. So,
Clearing the violations.
has anyone paid compounding fees ever? As an individual, has anyone paid? Okay, so when you jump a red light, what happens is you have two options. Either you go to jail or appear before a judge, or you pay a compounding fee. The challan is actually a compounding fee. That I am paying this fee so that I do not have to go to the court. Similarly, in the FCRA department, they introduce compounding fees and they are actually receiving huge amounts of money through this. Because the penalties are also very high. Right? So, these are the various compounding requirements. So, for example, you should say spending more than 20% admin. Then, the penalty is higher of 1 lakh or 5% of the excess spent. Then, not filing FC4, 1 lakh or 5%. Now, remember, if you file a defective FC4, that is also treated as a not filing FC4.
So 5%
Of the amount received. Not keeping FCR records or accounts properly, like I said, not keeping separate books, 5%.
There were no receipts in that financial year.
Then, because actually the penalty cannot exceed the amount of FC received. So if you receive 3,000, see, when I say higher of 1 lakh, there is also a 3,000 rupees fees which has to be given for compounding. So in that case, if there is no FC received, then there will be no penalty. Now remember that if you are not receiving any FC for 2 years consecutively, then you lose your FCRA. Depositing FC in the wrong bank account, again 5% penalty. Depositing local funds in FC bank account, again a 2% penalty. So there are other compounding fees also, which we have explained here. For example, NGOs are required to upload their FCRA audited financials on their website if they have a website. Many NGOs do not do that. They are not even aware. Some think that by uploading their consolidated accounts, they are doing a good job because they are disclosing more than required. But the law is very clear that FCRA account should be disclosed. FC4 need not be disclosed, FCRA account should be disclosed. So please advise your clients about this. And then there are all kinds of penalties. For example, if you do not, whenever there is a change in the board, then you have to file for approval of that change, form FC6E. So that form, if you do not, you have to file within 45 days. If you do not file that, then there is a penalty for that. So all kinds of penalties are there. So that is where we are as far as the present law is concerned, right? Any questions on the present law?
Yes, sir. If it is acting through elections, so like society, rather everybody and the change is
More than 50% from the date of original application.
Man, that 50% clause is completely out.
Yes, we have to
Even a single change. It is not information, it is approval. They have clarified that it is not information, it is approval. That the change does not become effective till the time they approve it.
Okay. But in case of election, how do we get prior approval?
That is a legal question. We should not raise it in terms of FCRA. FCRA only practical issues. So the practical issue is that they have said that as far as FCRA is concerned, the change will not be treated approved or effective till the time we approve it. See, their view is that LTO is nothing. It is the governing board which is everything. They are the ones who are really running it, right? Their focus is on the governing board. And there have been cases in the past where there was an NGO which had become defunct, and other people, they came in and they replaced the management and they took over it. That is why this 50% clause was introduced. But now they have become very more, how should I say, nervous. So they have said that even a single change, you must get that.
For some reason, NGO has paid a penalty of that 5%. Then there was some more changes in the rules, and they gave the refund of the late filing fee paid. Now the money has come to the non-FCA account from the department.
So you see, it would have come only to the account which you specified.
No, they took the bank account and they credited to the local FC, non-FCA account.
And well, you had paid it out of FCRA funds earlier.
Fortunately, we could not pay it in the FCRA account. That was
Originally, where did you pay it from?
non-FCRA account.
So the money has come back into the non-FCRA account.
Non-FCRA.
So account squared, nothing to worry about.
Department will not have an issue.
No. It is your money. I mean, it is non-FCRA account. If you had paid it out of FCRA funds, and then it went into non-FCRA fund, then they would call. Let me also explain this. Let me also introduce by the FCRA department. For example, if your FCRA is suspended, then where will you pay the penalty from? So FCRA department said that okay, we will allow you to pay it from FCRA funds. That is a big relief to many NGOs. Yes, sir.
So, for the partially speaking, penalty orders, are they appealable? Is there any ombudsman or otherwise a tribunal or any authority where it is appealable?
See, first of all, these are not penalties. They are compounding fees. That means that you are paying it voluntarily.
No, supposing I don't pay and they levy the penalty.
If you don't pay, they will cancel your FCRA. That is all.
They can't collect in the form of penalty.
There is no provision for a penalty in FCRA. Compounding fees is different from penalty. Penalty will be imposed through a court order. Sir, let me here clarify a little bit. I know this is a little bit off the record. So, have you ever fought a crocodile? The crocodile is all powerful in water. You know that famous story, no? Gajendra Moksha, right? So even elephant could not drag the crocodile out of water because the crocodile is all powerful in water. Now the situation is similar to that. That in FCRA, what the FCRA department thinks, you must honor those wishes. You must not get into conflict with them. Because it is in the income tax department, we can file any number of appeals, tribunal, this and that. And the income tax department is under government policy to be friendly toward the taxpayer. Because we are providing revenue to the government, So government will stop running if we are not paying that revenue. So the government wants the taxpayers to be, to not feel threatened. Here that logic doesn't apply. So that's why I'm saying that please do not use the income tax mindset in the FCRA department. This is Ministry of Home Affairs. This is Ministry of Home Affairs. Home is a polite word. It is actually Ministry of Internal Security. So their task is very, very tough. And therefore they have to take very, very tough stances.
For the trust, there is some mention about controlling interest of 15% and all that. How do you measure that?
Sorry?
When it comes to the trust, while filling the FCRA application, they are asking for a controlling interest to be specified between the trustees. One more than 15% and less than 15% and all that.
In FC4?
No, FCRA registration application.
I have not seen this 15%.
For companies, they are told 25% or something. Each trustee's interest. But for the trust, it's told 15% and above should be mentioned. We don't know how to measure that.
No, I am not sure because I have not seen this requirement. It is in Form FC3A?
Yes, yes.
I will have to check this and right.
Whenever there is a change, we are saying that we have to file the Form 6E. So in case if there is a change of trustees, and in the meantime we are also applying for the FCRA renewal registration. So can we go for, because we are mentioning the new trustee also there, but in the 6E once again we have to file it for him also?
You see, FC6E must be filed.
That is
separately. And the renewal application is a separate requirement altogether. So till the time the change is approved, so let's say that you filed FC6E on 15th August, you filed the FC3C on 15th September. The approval of the change came on 20th September, fine. But if the approval had come on 10th September, then the change trustees only would be reported in FC3C.
This is a different situation actually. The change has happened. We have submitted the FCRA renewal application. Now, do we need to file for that 6E separately or not?
You should have filed when the change happened. You can file it now.
That is what I was saying. Because I got a different opinion saying that since you are filing for the FCRA renewal, please hold on because it may anyhow not accept.
Who gave you that opinion? FCRA department or?
No, not for the FCRA.
See, maybe if the FCRA department is not giving you an opinion, even if I am giving you the opinion, it is only an opinion. And FCRA department is giving the opinion, that is a fact. So we will take a tea break. Yes. Good. One question.
My question is regarding one NGO can transfer FCRA funds to another NGO. Is it prohibited or should we seek any permission from central government? And which form should we file?
It is absolutely prohibited since 29 September 2020. There is no question of any permission.
Oh, thank you.
So how long is the tea break, sir?
15 minutes.
15 minutes. So we'll take a tea break for 15 minutes. So there is a bill which was moved in the parliament in March. That bill has not yet been approved. Right? We are not sure whether it will be approved. Would you like to hear about that? It's a very important bill. So would you like to hear about that, or would you like to discuss other issues?
We'll discuss about that also. We'll hear about it.
Sorry?
We'll hear about it, sir. What do you
The law? Okay. So this is going to be slightly boring. And let's hope it remains boring, it doesn't become exciting, real excitement in your life. But let me start. So this is, remember I showed you a slide, Amit Shah ji had promised that they will bring a new bill. So this is what has come. And there are 6 or 7 important changes which I will explain to you. First of all, the word key function, that has not been defined in the FCI department, in the FCI law. And they are proposing to define it. It will be defined in this manner that the CEO, even if CEO is not part of the board, they will still be considered as key functionary. Plus any other person under whose directions or guidance the organization is running, even if they are not part of the board, they will be treated as a key functionary. So that means that if there is a foreign donor who is running the NGO in an indirect manner, or there is a Guruji or some other Mahatma who is running the NGO, then technically that person should also be included in the key function. This is a very, very important change. Second is related to media production. So earlier media production was restriction. There is a restriction of media, that media cannot get foreign contribution. Now that restriction applies essentially to media houses or enterprises. But now because you have social media influencers who have become journalists in a practical manner, so the definition they have expanded to include individuals also. So if you are let's say you are a social media influencer and you have 100,000 followers on Instagram, and you start taking foreign contribution. Let me give you an example. Have you heard of a person called Rathi, San Rathi? Germany? Sorry? Yes, Dhruv Rathi. So he's based in Germany. And so, and he is running a YouTube channel. He also has, a lot of social media followers. So if he accepts any foreign contribution from anyone, and if he still has an Indian passport, then he will be covered by the law. Any percentage.
So taking means for charitable purpose or his personal use?
See, a media person cannot take for personal use also. Media person can take only fees in the ordinary course of business. For example, let's say that you are a journalist, you are employed by BBC, then you can get salary. But if BBC decides to give you some, extra incentive or someone else, let's say that, CIA wants to give you some incentive, then they cannot. Community radio, by definition, cannot contain any news. So therefore, it is not covered. With prior permission, so far there has been no limit on the time within which you should use up the funds received in the prior permission. There are two types of permission. One is project-wise permission, it is called prior permission, and the other is FCRA registration, it is valid for 5 years. So under prior permission, they will introduce a time limit that when you must receive the fund within 3 years, you must utilize all the fund within 4 years. And the funds cannot be received or utilized after this period. This has actually already become in practice because the department on 7th April 25 had issued this notification saying that you should it will applicable to all prior permission cases. Third change is very important. I mean, in some cases, there is an FCRA cancellation. Before that, there is suspension. So FCRA cancellation is like someone dying, right? But suspension is like someone being put in the ICU on ventilator. So here, what they are saying is that when your FCRA is suspended, you cannot use your FCRA fund any longer. The additional change is that you cannot also deal with your FCRA assets. So let's say that you have a building or you have a car, you want to sell it or mortgage it or do anything, you cannot do that. That will also be stopped. Remember what I am talking now after T is only what is proposed. This is not actual law. Okay? Now, in the past, there was a difference between, the difference between a cancellation, which was the most severe, and then, before that, someone has not applied for FCRA renewal, or, someone has surrendered their FCRA. These were softer forms of losing your FCRA. But under the new law, what will happen is that whether you lose your FCRA voluntarily or you lose it by government action, or for any other reason, everything will end up in the same place. All these cases will be referred to dafa. What is dafa? You know, in Urdu there is a word called dafa. Dafa 302. That means section 302, dafa 420. So like that we have a dafa called Designated Authority for FCRA Assets. So in all these cases, the assets of the NGO will be provisionally vested with the dafa. A new chapter is being added. This provision was already there in earlier law, but it was not formal and so elaborate. It is now very, very elaborate. So FC funds plus the FC assets will now vest in dafa on a provisional basis. And if your FCRA is not restored within the time limit, which they have not specified, let's say 3 months, 6 months, 3 years, then those assets will permanently vest with the FCRA department. Otherwise, normally what happens is, under the present law, that if you lose your FCRA, then your assets are given back to you after you regain your FCRA. When this law, when this becomes law, then you will not be handed over your FCRA assets, or rather you will be handed over your FCRA assets only if you regain your FCRA during the provisional period. Once that provisional period has lapsed, then your assets will not be given back to you even if your FCRA, you get your FCRA back. You are very quiet, but I am not sure you are very shocked. So let me try to explain, how this works. Let's say that there is an NGO in Bangalore. That NGO is, what is the very expensive place here? NG Road. So let's say that NG Road, they have a school or they have some building, office building. Very old. Now, the land is very old, but they have recently constructed a new building over there. And when they were constructing the building, they ran short of some money. The top floor they added, or the first floor they added, was with FCRA funds. Right? Rest of the building is with non-FCRA funds. Now the valuation of the land is 500 crores. And the valuation of the building, the amount they spent on that building is, let us say, 50 crores. Out of that, only 1 crore is used out of FCRA funds. Right? Now this NGO loses FCRA. What happens? Entire building goes. Because the FCRA department will give you back the non-FCRA portion if it can be separated. Now here it cannot be separated. Therefore the entire. Look at another situation. A typical situation. NGO purchases land with own money, or the NGO receives land with own money. Then they construct a trading center on that. That is done with FCRA money. Now they lose their FCRA. Then the FCRA department will take over the building. Along with the building, the land will also go. Because you cannot move your building. So, therefore, this new provision is going to have a very, very strong impact on the way NGOs work. Even an NGO which wants to give up its FCRA, because now it is not raising funds any longer, but has created an asset base, they will have to lose their asset base when they give up their FCRA, the FCRA asset base.
Give the example of land and building. The building falls off. Then what happens?
So that's a very good question. Did you push it to the ground or did it fall off?
It rained.
It rained. Genuinely rained or did you? So I remember a case where there was this organization when I was doing corporate practice. They had a fire in their godown. They were making TV cabinets. You remember old time you had those TV cabinets, wooden TV cabinets. So they called the fire brigade and the fire brigade filed a report and they filed a claim for 3 crore of insurance claim. They were not interested in the insurance claim. They were basically, what they were interested in was getting an income tax write-off because the cabinets had already been sold off earlier. So the insurance surveyor came and he wrote a report. He said that this is a fake fire because the TV cabinets were made out of sun mica and sun mica can never burn down. So therefore, if the building is genuinely fallen on stone, then you should write it off the books in the FCRA books. Then you are no longer in the threat. But if you deliberately destroy the building, okay.
So in that case, sir, if they receive an insurance claim, they give it back to them.
Sorry?
If they get an insurance claim in that building, let us assume this building and they got a very good insurance claim. Whether FCRA will have a claim on that building?
I think they will have to deposit that money in the FCRA bank account. And that will be a very nice thing actually. Because then give to Caesar what is due to Caesar. So, like I said, provisional vesting. Vesting is the term that they are using here. So, that means effectively it is transfer of ownership. And it is only provisional during the time when restoration of FCRA is possible. Once that time period has elapsed, then you would no longer have. So, I was in a meeting in Delhi and someone made a suggestion, that valid suggestion, that if your FCRA is suspended or cancelled, you should file an appeal. Because till the matter is sub judice, the FCRA department will not be able to take over the asset because it is still sub judice.
So when the matter is in sub judice, can they use the money in the bank account?
No, that they will not allow.
Against the cancellation of licenses and all, is there any appeal mechanism or redressal mechanism?
Yes, there is an appeal mechanism. There are two types of appeal mechanism. One is, what is called rectification under section 32. So, but that is like your old section 154. It is a rectification of mistake apparent from record. It is a perfectly useless section because, what mistake can be apparent from the record? IB has given a report, a negative report. Then that only mistake can be that, by mistake you use the wrong NGO's name. So, one NGO's FCRA was to be cancelled, you cancelled another NGO's FCRA because the name was similar. Apart from that, section 32 is not available. So, you should appeal in High Court.
Now, against seizure of assets, confiscation, etc., under section 25, there is an appeal mechanism under section 29 and adjudication under section 30.
No, it is that section 32 only, no?
No, 32 is a rectification of mistakes.
Yes.
Section 30 provides for adjudication of the matter before a sessions court. Against that, you can go to the High Court.
Right. That is the case of
there is a confiscation only.
That is where the confiscation. So that provision is being revised here. So effectively, in fact, as I will show you just now, that where the asset moves to DAFA, the options of appeal will get limited. We will just come to that.
If the assets are confiscated or say livestock, are they supposed to maintain the livestock?
Yes. And they're supposed to milk the cows every day also. So then, practical implications means that, investing, that they will effectively get possession, management and supervision of assets. And if necessary, they will also take over management of the entity activities, like maintaining of the livestock, and utilize the FC for managing those activities. That is for the DAFA, the designated authority for FCRA assets. So, like I said, mixed assets, mixed FC assets, where it is partly SC, partly non-SC, it is a very bad place to be in, because like I said, for a small 10% or token mixing, you will lose the entire asset. So you should really make sure that So you should really make sure that your this mixing doesn't happen. And wherever mixing has happened, then you should apply your mind to see if you can unmix it. Okay. So for example, let's say that you have a building which you purchase with mixed funds. Is there a possibility that you sell off the building, receive the FC portion in the FCRA account, non-FC portion in the non-FCRA account, and then go and purchase a different building with either FC fund or non-FC funds? Please do not do a transaction like Jet Airways, because that is specifically prohibited. That what happened with Jet Airways? Jet Airways, when it was being wound up, then the allegation is that Naresh Goyalji became one of the buyers through a proxy transaction. So don't do that, because again, as I am saying, that the government's capacity to detect and prosecute such cases is now enormous. So, but as long as you are above board and you are doing a genuine transaction of sale and re-acquisition, then you should be fine. So, like I said, permanent vesting will happen after a certain period of time, which time limit will be specified, and so which time period will be specified. And once the assets have been permanently vested in the government, you cannot get it back. The government has the power to sell those assets, or use those assets, or to transfer to any other government department as it sees fit. As I said, you cannot also repurchase those assets. So you are very attached to the building, and you want to repurchase it with non-FC funds, you are excluded from the building. So you cannot get that. One very sensitive provision is religious places. So even under FCRA, you know that FCRA is for, there is an acronym we use, CREES. So cultural, religious, educational, economic and social. These are the 5 purposes for which you can get FCRA. So that includes religious also. So if anyone has a religious FCRA registration, they can use it to build religious places like a temple or a mosque or a church. So these are not exempted from being taken over by the FCRA department if the FCRA of that organization is cancelled. Only the change there they are saying is that the government will ensure that the management of the place is given to a person who will help ensure the religious character of that place. That is the only safeguard that they are adding here. Now, all this, will this apply to assets which you have acquired in the past? Yes. Our reading is that this will apply to all existing FC assets. In fact, that is the reason why 4 or 5 years ago the department started collecting details of the FCRA assets. Every FC4 that you have filed, you have included details of the FCRA assets. So that is why they want to track those. And we believe that it will apply to all cases where you surrendered your FCRA registration, or it has lapsed or lost for any reason after the 2010 Act became effective, which is May 11. and they might bring it to cover even earlier cases, older cases, 1976 onwards cases, those also. Because in 1976 the registration was not required, but NGOs were receiving foreign contribution. One provision is that if an NGO is likely to become defunct, which has FCI registration, then the governing body members should inform the FCI department that this NGO is likely to be closed down and please come and take over the FCI assets. Now, with regard to appeal against the DAFA order, that is 90 days you can appeal, and in the local district judge court of the local district judge. Now, let me also tell you that although all these limits are there, I think the High Court and also the Supreme Court has necessary power to take up any case where it feels that injustice is being done. So despite the limitations which are being placed in the law, the High Court, and you can approach the High Court for relief in any case. Government can also exempt any NGO or any entity from FCRA. Like for example, PM Cares. PM Cares is exempted from FCRA. There are many other organizations which are exempted from FCRA. So you have to very carefully now think of your capitalization issues. And in NGOs, the capitalization is very, very confusing. So I remember I went to an NGO in Uttarakhand, and I asked them to show me the fixed register. So they also had a guest house. So in the fixed register, they had listed all the spoons, all the cups, and all the bone china matter also. So, but this is not, it is a real thing, but I have seen people capitalizing fans, calculators, wall clock. In NGOs, this is typical. Because when an NGO starts off, then even a simple thing like a wall clock is a major thing for them. So they capitalize all this. So what we are advocating is that you should have a clear policy on capitalization. In companies we have a policy that below 5,000 or below 50,000 we will not capitalize. Otherwise, the cost of maintaining that record of the capitalized asset is much more than the value that you gain from capitalizing. Secondly, is that if you give in an asset to the community, please don't carry it in your own books. Again, we see that many NGOs what they do is that the asset, that deep freezer for example I talked about, or the milk freezer, that is given to the community, but the NGO is for some reason carrying it in its own books. Now if a DAFA situation happens, then they will have to produce that freezer. And of course, don't charge your assets, real assets, to expenses unless you are giving them to beneficiaries. And last point, don't use FC for land or buildings. Because in India, that is currently the most, after gold I suppose, it is the most appreciating asset. And land and building is critical to NGOs function. So traditionally NGOs have created infrastructure at FC, but this policy, this change in law will put an end to that completely. There are some minor changes proposed, like relaxation of jail term from 5 years is being brought down to 1 year. Then coverage has been enlarged, and they are saying that any board member is negligent, then they will also be liable to these kind of things, right? So that is an end to the formal presentation, and we can now talk about some other issues.
Are there any landmark Supreme Court or High Court judgments which we should know a little about it?
There are many judgments. There is an FCRA handbook which is available on the accountant website. They have listed all those judgments. But there are no, to my knowledge, and I had done this research 5 years ago, so I am not fully updated. There are no very advantageous judgments For example, recently, someone from Agarwal went to the Supreme Court saying that this FCRA is not a good law, and their appeal was rejected. They're very favorable. And again, sir, I am saying from my experience of dealing with NGOs and looking at these cases, don't get into a situation where you have to fight the FCRA department in the court. Even if you win, it is a hollow victory. So, I have not seen any cases where people have won with the FCRA department and have remained happy after that.
On complaints part of it, see, for example, FC1 is to be filed by the person who is in receipt of money from a foreign source related person. More than 10 lakhs it has to be reported, earlier lower limit okay. Unrelated person receiving need not be reported. There is a lot of illogical discrimination between these two. Any idea why?
See, honestly, I am not sure, but if I guess, I will say that essentially, the relaxation is only for non-program purposes. See, if you are receiving money for program activities, then whether you are related or unrelated.
Sorry, I interrupted, but because receipt of a gift from a foreign source by the family relatives in India, up to 10 lakhs exempted, beyond that they have to report it. FC1 needs to be filed. Same, see, here it is a gift for self-consumption purpose, not program related. They are not in NGO activities or any other thing. Still they will have to report it. Whereas unrelated person need not be.
So probably if I'm trying to guess, I think that the reason is that if an unrelated person is making a gift to you, then that can happen only in two situations. Either you are a beneficiary or you are a conspirator. So if you are a beneficiary, that can be established easily because the donor will have certain criteria for giving to a beneficiary. Your economic condition, all those situations will be there. If you are a conspirator, that can also be established easily. So that is why probably the government has followed this path.
So now most of the parents who are in India, whose children are abroad, for some purpose or the other, for house building or for family maintenance, they have been gifting the money, they have been sending the dollars as a gift to the parents and for their own consumption. Are they also required to file FC1 bigger?
Absolutely. If the child has become a foreigner, then they must report. If the child is still holding Indian citizenship, then they need not report.
No, the moment they go, they become, they will have the green.
No, so green card is completely different from foreigner. Green card means that you are still an Indian citizen. That is why you need a green card.
No, they give up Indian citizen and they take a foreign citizen.
Sorry?
They give up Indian citizenship and they take foreign citizen.
When they become a foreign citizen, then
foreign passport holder.
Then only it is to be reported. As long as the person remains Indian, they need not report.
I have not come across a single case where the receipt of the money by the parents in India from their children abroad are being reported, and it does not even come to our notice anyway.
Sir, how would you know how much is being reported?
I really know.
Huh?
Don't know.
Yeah, so because that information not public.
See, if a person receives 5 times in a year more than 10 lakh rupees, whether he needs to file.
Any time the amount crosses 10 lakh rupees, suppose the person is using 2 lakh rupees 5 times, then the 5th time they have to report.
My question is, if a person receives every time more than 10 lakhs, assume 60 lakh he received in a year, whether he need to file the FC1 for 6 times?
6 times. Because there is a time limit for that, I think it is 3 months.
30 days.
3 months.
30 days?
Within 30 days from the date of receipt, he is supposed to.
Right.
So filing that FC1 he has to get a registration.
No, that is not.
So this 2,000 per day, rules and norms they mentioned about.
Yes, so another thing is that they are very concerned about cash. So you should not, actually NGOs were very fond of cash because they work in the field and cash is the most convenient. So they have come out with a different opinion. They said cash is most suspicious. So please don't use cash. So they've said that only 2,000 rupees you can withdraw and spend. At another place they say that you can withdraw and spend up to 20,000 rupees. So it is very confusing. We are not clear. Because one place they are saying 2,000, in the prior permission letter or the FCRA registration letter, along with that they give a declaration, there they say 20,000. So we say that advocate on the side of caution. I will again use that same example that FCRA is a very dangerous enemy. So you should stay a little far away, err on the side of caution.
Sir, when you say a political person, whether it is applicable for a booth level election also?
No. Booth level election meaning?
I mean booth level persons.
Who are booth level?
The panchayat election is going on. One of the person gets the gift from the foreign country.
Yes. Panchayats are legislative bodies. Panchayats, municipal corporations, they are all legislative bodies, and therefore FCRA applies with full force to them.
And
NGO is receiving CSR fund from an Indian company, which is only one subsidiary of foreign entity. Will it be regarded as foreign institution?
Ma'am, there is a dispute between us and other colleagues on this issue. So there are many who believe that this is exempt. We believe that it is not exempt. It should be treated as foreign contribution. Finally, the compromise is that if the donors say that they are of an Indian source, then you treat them as non-foreign. If the donors say that they are foreign source, you treat them as foreign. Because with the FCI department, it's very difficult to figure out what to do.
Do you mean to say we have to get a declaration from the subsidiary company?
See, you should first, yes, that we have suggested that language also and the questionnaire, how to determine whether a source is foreign or not. If you feel or if the donor is amenable, typically if the company is a small company, they will be amenable to your treating them as foreign source. If the company is large, then they will not be because they are worried that they are violating another area. So go with that first. Get a confirmation from them, and I said that ultimately you can pay a penalty.
My doubt is regarding FCRA registration. So for financial year 24-25, the NGO has been registered under FCRA. So they have received 0 funds and filed FC4 as a nil return. And subsequently, FCRA has cancelled their registration. And for financial year 25-26, they have received foreign donations. So how to deal with the situation?
Did they receive the funds before it was cancelled or after it was cancelled?
After.
They received the funds after it was cancelled?
No, before, sorry. Before.
So they should go into appeal because typically, the requirement is that if the NGO is not receiving any funds for 2 years, then they will cancel it. They should appeal on that.
So in case of gratuity and EL encashment, so 5 months in FC, remaining months in local funding, how do we...
See, you should make 2 checks, you should make 2 payments.
Provisions, how do we make it?
You should make them separately in the FCRA and the non-FCRA books.
And my second question is, if asset is created out of both FC and local funding, and now I am generating interest out of it, suppose training institute, where do we account that income?
See, this is exactly what the FCRA department said, that don't mix your funds. But now you mix your funds, so you will have to sort it out. I mean, this is a big problem. We have seen some cases, similar case. This is a coaching institute. I will not go deeper into that, but it's a highly complex training institute, and they have huge infrastructure, which is created partly out of FC and partly out of non-FC, and they are training thousands of people each year. And they are unable to determine whether to treat this income as FC or non-FC because so the asset is created out of FC and non-FC. So as I said, the FCRA department is has not come out with a clear guideline on this. So the very least that you can do is that if you are incurring the running expenses, forget what is with the infrastructure, but if you're running the running expenses incurring out of, if you're incurring the running expenses out of FC, or if the infrastructure is majorly FC, then treat the income also as FC. If you are, if the running expenses are non-FC, then you treat it as non-FC. Okay. So it's a case by case. You will have to decide what proportion to use. If possible, sort it out, by selling the assets and acquiring new equipment, etc. But this is going to become more and more messy as we go forward. Now, before you ask another question, I have to share one very important thing with you. See, I mentioned that in 2020, the government amended the law to say that re-granting is not allowed. So did the re-granting stop? What do you think happened? The government said that FCRA funds should not be re-granted to other NGOs. So what did NGOs do after that?
GST invoicing.
So NGOs were misguided by people that if you are paying another NGO for commercial services, then it will not be treated as FC. So they started entering into service contracts with other NGOs. Now this is extremely foolish. Because as I said, that the FCRA department is a very common sense kind of a department. They are not lawyers, or they are not financial wizards. They will not go into all these nice issues, GST involves, etc. They will just say that you have transferred funds from FCRA now to a non-FCRA entity. So please don't allow your clients to do anything like this. Because one last thing I want to tell you is that FCRA department has set up a brigade of auditors. They were earlier sending people from the CAG, retired from CAG, etc. to do audits. They were very simple, nice people. They were not going into deep issues. But now they have empaneled some 20 CA firms who are doing these audits around India, and they are going very, very deep. They are looking, for example, in some cases they are looking at even the Aadhaar cards of the beneficiaries, verifying that level of information. They are looking at structures, they are looking at, because they are CAs, so they understand, how things are done. So they are looking very deeply. So please, be aware that anything that you are doing, if it is scrutinized during an audit, it is bound to come out.
Sir, I have one more question. This purpose of FCRA, social, education and religious, even in the re-registration or renewal, so they are not, even though we have applied for social and education, they have given it only for, approved only for social. Does it include, but nowhere in the act they have defined what is social, what is education, what is religious.
So that's a very good question, and in the FCRA handbook that you probably have, there is, we have reproduced from the booklet which was handed out during an ICI seminar with the FCRA department. They had explained what these categories mean. But there is an ambiguity here. These categories, they are only on the nature of the organization. You can use your money only for, just below that you write for what purpose I will use that. Because social is a very, very wide category. Within that you might have said that, I'm going to use it for, welfare of women. Then you should not undertake welfare of men. So you should restrict yourself only to what you said. Second thing is, when you try to change your category or your purpose, you have to file a different form. I think that is called FC6A or B. It will not be changed when you file FC3C. That is a separate issue, but that is a legal requirement. So, and they have said in some cases that your change is not, effective or reviewed just because you have filed mentioned in FC3C.
There is a plus. So, after you find nil returns of FC4.
FC4.
FC4. Nil returns for 2 years, and
the FCRA registration is cancelled. Right now they are not looking for any foreign contribution, but in case they need to get any foreign contribution in the future, can they apply for registration?
Yes. I think there's a cooling period of 6 months or 3 years before they can reapply. In case of cancellation, it is 3 years. In case of rejection of application, it is 6 months. So, and remember also where your FCR renewal is denied, you should typically go back and apply again. But before applying, what you should do is, you should establish the reasons for why your FCRA renewal has been denied. And how to do that is to go to the FCRA department, try to meet them, and become Sharnagat. Sharnagat, you understand? So I think Vibhishan became Sharnagat of Sri Ram, right? So like that you become Sharnagat and you tell them that, sir, what have we done wrong? Why are you upset with us? We do not know. So please guide us. And in our experience, FCI people are very helpful in such matters. If you are a bona fide welfare organization, and they will tell you that, okay, this is what you've done wrong, and you rectify this, and you apply again, and we will give you FCI. And it's been working very well. So please don't think that once FCI is cancelled, don't go into appeal, or I do not at all suggest that you should go into appeal in such cases. You should first try to apply again for fresh registration.
Under what circumstances balances in NRO accounts, FCNR or NRE account considered as a foreign source, and where to monitor, how do we track it?
See, so this NRO, NRE account history I am not very clear about. But let me simply tell you that irrespective of whether the money was in NRO account or NRE account, the moment the person becomes a foreign citizen, that money will become foreign source.
Yes.
Foreign contribution. Till the time the person is not a foreign citizen, the money will remain non-foreign contribution. So I am not very clear about why this two classification are used by the banks, but that is the FCRA Act.
Now, when donations are paid out of these balances received by these trusts or individuals or any kind of a thing, how do we track and where do we capture it?
Sorry?
When the grants, donations, etc. are paid by the foreigners or non-residents out of these balances, NRO, FCNR or NRE accounts, the receiver, how will he be able to
see, there is something called due diligence, right? The FCI department says that you should do due diligence of the donor.
If I get a donation, that itself is great actually. But where do I want to ask and investigate him actually?
No, sir. See, this is actually you are. This is not the right approach to take with FCI. Forgive me for saying this. Never argue with the FCI department. So when you say that as humor, yes, you are right. That it is great to get donation, but remember that donation also. I was in fact sharing with Kavita ma'am. In Gita, donation is defined in 3 categories: Sattvic, Rajasic, and Tamasic. Right? FCI department also following the same classification. That a donation which is received in India for disruptive activity is Tamasic. So therefore you have to do donor due diligence. What is the money being given to you for? I will give you a classic example. In the around year 98 or 2000, there was a World Cup, football World Cup. Right? Just before the, what happens when World Cup takes place? The sale of football goes up. Because everyone starts buying football. Where are footballs made? hand-stitched footballs are made in Ludhiana or Punjab, somewhere in Punjab, right? So just before this World Cup was to happen, one NGO received money for conducting a study on child labor involved in football. And that study came out, and the international orders for purchase of football were cancelled. So this is an example, sir. And you know, I have worked with NGOs all my life. I do not say for a moment that NGOs are bad people, but NGOs can be used and misused. And they sometimes are without their knowledge. That is why NGOs should do due diligence of the donor. And if you do not do this, then you will end up with problem. So an example is that, you know, where, for example, in Himachal, there was a Buddhist monastery, and at one point of time there was a complaint that, you know, some sexual irregularities are happening. So the FCRA department people went there. They found that they were receiving lots of donations in foreign currency. So now you know what is the situation of Buddhists, that many of them are coming from Tibet and they are bringing dollars, etc., which they are contributing. So they cannot segregate between what is FC and non-FC. So the FCRA department said that please put two donation boxes here. One say Indians and the other non-Indians. So whoever deposits non-Indian will be treated as non-Indian. Whoever deposits Indian will be treated. But that is in a situation of genuineness, where in sincerity. If you deliberately try to use the law to launder money, then you will get into trouble. And these days, as you all know, it is the CAs who get into trouble first and the clients who follow later. So the first port of call of the authorities is now the CA. So please be very careful.
Project advances, when they transfer, they are transferred to the personal account of the employees, because they will go to the field and the organization will be say Bangalore and the work is happening somewhere. And they give project advances and the money will go to the savings account of the employee, and they will use the money, they will submit the bills and submit the advance. They will advance. Is that the
Yes, very good question. Because what is happening again here is that after 2020, NGOs started re-granting funds through this mechanism also. That they will take on the employee of the other NGO on their payroll, and they will give advance to them and they will conduct the program activity. So FCRA department is reviewing all such payments also. The mechanism is that you should try to make the maximum payment directly from the main office through bank transfer. And the staff should be given advances only for traveling or, genuinely where, they need to spend money for some specific item. Reimbursement of program activities. No, I think it is the amount to the same thing.
One more question I want to say that 2,000 rupees cash problem is, sir. Suppose the NGO transfers money to banking channel and down the line the employee gives the money to the even whether the employee
Yes,
is an
yes.
agent of the
Yes,
because
yes.
under Income Tax Act we have an exception in Rule 60B where agent is required to pay the cash for goods or services can be.
Ma'am, I will tell you I said right in the beginning.
Yeah, don't write it, sir.
Don't use income tax logic in this. Okay.
FCRA going to mainly governs the receipt of the money. Is there any parallel activity or regulation or anything for the money is going out of India?
When money is, I will make a suggestion to the FCRA department, sir. Because I know that yes, a lot of money, $250,000 you can donate.
Yes.
But that is not yet regulated.
Sir, vendor advances are permitted.
Again, in the ordinary course of business, they are permitted. But you should be very careful with vendor advances because accounting and everything become very complicated. So try to avoid it as far as possible. In some cases, we've seen that vendor advance is given and the SCRA registration is lost. Now the vendor cannot give the advance back. So.
And all these foreign receipts, issuing of ATG is must or can it be ordinary?
No, it is completely optional. See, what we advocate is that only where the donor asks for, only where the donor requires a tax exemption, that their receipt need to be detailed in Form 10BD. Otherwise, it is not necessary.
All receipts has to be, all donations are
That's not our interpretation.
Between parent company abroad and subsidiary in India, and most of the transactions are on account of business transactions, capital or revenue or vice versa. To what extent FCRA provisions are applicable or to be governed?
No, there is no applicability for business transactions. But I can tell you there are some cases where business transactions are routed in a manner, structured in a manner that they can attract FCRA. There was a case where there was an international audit firm which received money for training of its staff from its own foundation abroad. And their FCRA violation issue arose. So you need to take that.
So with regard to maintenance of books, is there anything in the Act which suggests about mercantile or cash basis? Because practically
so they are not concerned with whether you maintain mercantile or cash. You should report only on cash basis. Because they take the receipts and payment account as a basis. And that is, yes, very important point. Some people are reporting in FC4 on the basis of income expenditure account. Please don't do that.
So payables cannot be part of our...
No. Please don't do that. Please always report in FC4 on the basis of receipts and payments account.
Any other queries, or shall we consider it as Q&A session is done? Yes. Thank you so much, CS Sanjay Agarwal sir, for coming down from Delhi to Bangalore and addressing the crowd in Bangalore. I request CA Kavita Parmesh to come on to the dais and hand over a token of memento for today's speaker. I'm pretty sure it was definitely a deep dive into FCRA regulations. Thank you so much, sir. It was our pleasure to have you in Bangalore.